Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, there's David Stendahl with tonight's Deep Dive. It is December 26, 2018. We're going to talk about equity markets because there was such volatility over the last couple of trading days. Here's the S&P 500. I do want to note that we're still in a downtrend despite this huge surge that we saw today. So short, intermediate, and long term are still pointing to the downside. A little ambiguity here when it comes to the technical rating, and that could either bolster a sell-off to the market or there could be the continued surge in the market. So there certainly is opportunity when you have the technical rating flat because there's not a definitive answer as to which way the market's going to go, and you'll see people pile on when you have that kind of a scenario, and that's obviously part of what we saw here today. Now, during the course of today, we had the pivot low that occurred in our elastic level, and we also had a sub low that occurred in another momentum indicator, this one, the power level being a little bit longer term. We still have a support gap that's out there, so if the market is to sell off, there's obviously not a lot holding it here because of the extreme volatility that we've actually had within the market, that I don't think it's had a chance to really digest the volatility that we've been seeing here. But we're back above the levels that we were on Monday, and from that standpoint, we'll see as whether or not things are going to hold here. But because the trend is still pointing to the downside, this could be a dead cat bounce, and the market could still sell off a little bit further. Base building is certainly required here. The other thing I'm going to point out is if we take a look at some of the different pro alerts, we did have in the S&P 500 and the Russell a surge load that did occur today, which is typically take your profits while you can. Obviously, with the big bounce we had, there's no doubt you're going to have a condition like that. But we also had some reversal type indicators. Nothing too dramatic. Of all of the different reversals, the dazed is one of the earlier reversal type patterns that we see. Typically we want to see a few more of the other ones, so this is more of an early warning signal, but it simply tells you that something volatile happened, and I think anyway that's been in the S&P could have seen that. If we take a look at the weeklies, you'll see at least here in the Russell we had a surge low, another profit taking, this on weekly bars. But what I want to point out here is we had a day's low again on weekly bars, no surprise, but it's this low right here, this T-rope low. We don't often get a T-rope low, and I'll explain what that is in the S&P 500, and so we'll spend a little bit of time specifically on it. Now, we just looked at the patterns on weekly bars, and so here's a weekly bar for the S&P 500. You can see the sell-off that we've had. We're down considerably, even with that little bit of a pop today. But this line right here is a 200-week moving average. Nothing dramatic, nothing fantastic, but we just haven't had any interaction with the 200-week moving average for quite some time. So I pointed this out when I noticed it on Christmas Eve on, I guess, Monday. I put a little tweet out there that had taken place, and the fact that we came down, we found some support. Even last night, we saw that the market was selling off just a little bit below that, which was a concern for myself. But we did get eventually the pop, and then we had that huge buy opportunity. But we're still looking at a substantial sell-off. So yes, despite the fact that the market is up, you can still see the trend is to the downside. So with that being the case, the way that we're looking at this is that our systems, we did unwind some of the positions, but we're still short the markets with nice open position profits in both the S&P and the Dow Jones. So we're going to see as whether or not the market is going to actually base here, or if it's really going to really start to do a bit of a retracement, maybe perhaps down to the 200 week. I would like to see a bit of a base building. This volatility that we're seeing to the downside, if I pull up here on the daily bars, this sell-off that we had and the nice little reversal, there could be some more continuation, but in a perfect scenario, I would love to see a little more sideways consolidation, truly build this out, get the moving averages to sort of stabilize a little bit, get the overbought condition that we're seeing here in the volatility indicator, this energy level, get that to subside, and then we'd have more of a thrust to the market. Let's see how things kind of play out. I can definitely see if there's more of a continuation to this upside that it may not hold. I mean, we're dealing with lower volatility, or excuse me, lower volume during the course before and after that of Christmas, that you just don't see as much. It was, a nice volume day, but it wasn't a substantial volume day that we've seen in the past with nice surges. So that being the case, I'd still think that there's going to be more of a base building right through here, and we'll see as whether or not this extreme volatility that we're seeing based on the energy level can actually maintain itself. Typically it's not. So look for a little retracement, look for base building, and if we get legitimate base building both on the daily bar basis and really stay above support levels, and more importantly stay above this 200-week moving average, that I think is going to be critical to what we're looking at, because it has been a long time since we've come down and touched this. Now normally you'd think, oh, this is the perfect buy and dip type formation, and it could turn out to be that, but from a perspective of a system, we want to see a bottom before we call it a bottom, and therefore I'd suspect that we're going to still see a little more base building, and hopefully there still will be that condition where we can start to unwind some of our short positions, having had that nice little sell-off, and start to build out a nice little long side opportunity for ourselves. So that being the case, watch your position very carefully. Expect some more continued volatility going into the remainder of this week, and then once we get past New Year's and we start getting into more of the trading gear, we should start to see a little more oomph to the market, a little more volume coming in, and that will dictate whether or not this really is or was by that time a legitimate buy on dip type formation, or is the market really just going to start to sell off here. I'm looking for consolidation, volatile consolidation as it may be, but still a consolidation here, base building in other words, so that we're in a position where we have something that's actually viable and something that is truly strong, because as I mentioned with one of our indicators here, we have a support gap here for the S&P 500, which means that there's not a lot of support to the market, nothing substantial as far as support to the market, and so this continued volatility, this just really just making these major moves, if there's nothing really to hold it there, then we're going to see continued volatility without a doubt. So with this being the case, watch your positions very carefully, and we'll see how things kind of play out here. Thanks very much. We'll look at another market tomorrow. Bye-bye.